Hello and welcome to another Impact Insights. I'm delighted to have with me today Damian Thompson, who is Group MD of Retail Finance at Aldermore Bank. Thank you for your time, Damian.
Thank you very much, Dale, and thanks for inviting me on.
No, pleasure. So just want to, next 15 minutes or so, just want to ask you a few questions about the market. Obviously, we've been through some real trials and tribulations over the last 5 months. What's happened at Aldermore? What's happened to you personally? Have you got everybody back in the London office and so on?
So we still continue to work from home. So if I start at the beginning of the journey, we were one of the first people to close our London office as we looked towards the pandemic and we saw some of the issues. We were very quick in terms of mobilizing that. We got very quickly 95% of our staff to be working from home.
Okay.
And we continue with the majority of people working from home. But we have opened up some of our core offices for blended working for people to return to the office who absolutely need to. But we're keeping it under surveillance and, continuing to work through how we support brokers and intermediaries across all of our channels in terms of the support they need. So we are still continuing to work like we always did. As you know, throughout the pandemic, we kept open for business. Sure. We kept serving intermediaries and brokers across all our lines.
That's really good. And how have the staff found it working from home? Been pretty straightforward?
I think working from home has been an adaptation for everybody. I have young children. Other people are in accommodation with parents, friends, and flat. So I think everybody's had a bit of a varied position, but I think we've all kind of got used to it now. In terms of how that works, and actually being able to maybe start to focus on some of the areas that we really wanted to, and to do some of the things that needed to be done. So in terms of getting teams together, really focusing on what the priorities need to be, how do we keep brokers supported, and actually how do we keep, it's great to lend a mortgage to a consumer, but the challenge comes when they're going through difficult times and how you can support them. So working through payment holidays, making sure we've got the ability for people to communicate. We used the internet and the social media channels really well to support customers. I ran a channel effectively for questions on Twitter, etc. So we could start to try to keep people very clear about what they needed to do and how we were going to support them in terms of getting that first initial payment holiday done and making sure people knew how they would apply, and then working really long hours over the weekends. We had staff working through the weekends to deal with all those requests. Happy to say we got through them all. And, those customers, we've got some really, really strong feedback from customers about 3 things really. The ability for us to respond when they needed, the clarity of the communication we gave them, and just the way that our staff have engaged with them through what are challenging periods for themselves, because there was a lot of uncertainty. So I think feeling that we did really well in terms of coming out of that.
Yeah, I know you've got a really good brand presence all across the market, which is really credit to you guys. The mortgage payment holidays obviously has taken up a lot of your time. Do you think that's where we've seen the peak of it, or do you think there's going to be another influx before the October deadline?
I think there's a couple of things that the market needs to watch. So I think clearly we've had the furlough scheme coming to an end, and you can see as that furlough scheme comes to an end, we get more and more announcements about job losses, etc. And therefore, I think we're going to find that a number of consumers are going to be impacted by that. Certainly, I would expect as we get towards the end of October. And those are the customers that are going to be feeling quite nervous, quite tension, children going back to school, challenges with work, looking for new jobs. And therefore, I think we've still got some time to play in terms of the furlough. Clearly, we're seeing the R rate go up in a number of different places. And I guess, as we look at more localized lockdowns, how is that going to work? And what's the impact of that going to be, not only on new business, but on existing business? So I think there's still more to come, Dale, and we are just really monitoring closely and trying to keep intermediaries and our teams clear on the things we need to do.
Sure. And Aldermore obviously has a larger parent who's a foreign entity. Have they been involved heavily in the day-to-day, or have they just left you to it? And
Well, to be honest with you, we are part now of the First Round group, and First Round is a major player in the African continent in terms of banking. So we've been sharing experiences of how things have worked. We've been talking to each other. We've been keeping in touch in terms of the impact of COVID-19. So it's really been a really strong group-wide presence, and I think the ability to have someone in a different jurisdiction going through very different challenges in terms of the economies in South Africa and the economies in the UK, but lots of learning points that we can support each other. I think it's been really good to be able to support each other through that change.
Yeah, that's really good. And more sort of locally, on the residential side, and you're looking at 85% loan to value at the moment. There's been a lot of sort of ins and outs from lenders entering the 90% market. Is that something that you've considered, or is that something that you're just watching what happens in the market at the moment and we'll see what happens?
Well, we've got plans for 90% and even 95% at the appropriate time. I think we are looking through those. We can see that there'll be a level of support required, but I guess over the next couple of months, I think we're going to watch very closely. And we're going to look at the impact of the furlough scheme ending. What does that mean for customers? And I think one of the things that we are really considerate about is we've always lent at 95% to people with less than perfect credit, self-employed, short-term incomes, etc. So therefore, I think it's really important that we balance acquisition and also looking after those existing customers, because some of them have been challenged throughout the COVID-19. I'm glad to say a significant proportion of our customers have started to pay coming out the back end of COVID-19 and coming out of those. And I'll keep a very, very close eye with the team on this market. We recognize that we are one of the supporting areas, one of strong supporters of customers in those areas. And as soon as it's feasible for us to return to that market, we will.
Sure, no, fair enough. And what do you think about the volatility of the property market at the moment? A lot of people are obviously skeptical that they may well see down valuations in certain areas across the country. Is it going to be area specific, or are you starting to see that already?
I think we're starting to see a pretty strong core growth across the UK, because effectively the stamp duty changes have done a couple of things that I think people need to be aware of. So if you were thinking about downsizing from let's say £1 million property to something less than $500,000 because you wanted to do that, I think the stamp duties provided some emphasis for that. So you can sell up and then you can purchase something lower down without no stamp duty. I think COVID has also made some changes to people. So people effectively trying to get out into the countryside. Secondly, I think you've found that parents and families wanting to move closer together for support, so that if they have to create a bubble, they're thinking. So I think there's a number of impacts as long as COVID-19 continues, and you've got the stamp duty changes, and you've got that ability for people to step back and say, what's really important to me? I think we'll continue to see this happen. And to be clear, we don't have enough houses for the demand. So I think as you start to see that, as you start to see more university students, maybe due to the changes that have happened, start to go back to university, then landlords are going to see higher levels of people wanting to move into flats, etc. And I guess still we need to see the impact of foreign students coming back. So will the foreign students from China, from other parts of the world, start to come back to go to university? And what does that impact mean for them? And what does that impact mean for them? I think it's going to be really, really important. So I think we're seeing lots of changes in the market. Now, how the market deals with that as we go forward is going to be a bit of a challenge. But Dale, I expect that in certain areas, if we see big job losses, we may see some changes to localized areas and localized valuations, but I think that's going to be quite challenging.
Yeah, no, fair point. And with that, you know, also you mentioned colleges and universities and bits like that. The buy-to-let side at the moment seems to be very invigorous across the whole market. I think we're seeing the professional landlords really stepping up a gear, but actually the private landlords, the one buy-to-let owners, maybe have got a little bit more nervous now with regards to what do they do next. Have you seen that across Aldermore?
I think we've seen a really strong performance from specialist buy-to-let. As you know, this is one of the areas that we are very keen. We've always supported, but we're very keen to grow. And I think that part of the segment has grown really, really strong. I think that reflects where you are. I think for some of the single landlords, certainly it's a time that they'll be reflecting on, look, we've had the tax changes, we've got other things that are coming into our mouth, and now I've got COVID-19. How do I manage and respond to this? I expect to see them continue to look at their portfolio, not portfolios, and decide what's the right action for me. And I think the specialist landlords will also see the opportunity to grow their books. And I think that's what we'll continue to see as that market changes.
Is it getting too complex for private landlords in regards to, everything's on a rental calculation? Sometimes it's 125% or 145% of the rental calculation on pay rate, which might be a 5-year or a 2-year. It will then be different if you're a higher rate taxpayer, lower rate taxpayer, additional rate taxpayer, and so on and so on. Is it just too complex now for first-time landlords to get into the market and actually make some money?
I think one of the interesting bits is I think people will always be attracted to property, but I think this is a time for the broker. So as you've said there, really, if you want to be a landlord, taking specialist broker advice for people who do it day in, day out,
good point.
In terms of deciding what you want to do, it means that the broker is in a much better position, I think, to really support people across these marketplaces. And I think, as you said, the complexity draws itself to advice and to support. And I think for landlords, the amount of people, companies like yourselves, other brokers in local areas, we've got to get some education, we've got to get some stuff coming out to say, look, you've got the ability to come and speak to a specialist, which you guys are, to work through, number one, is this the right way for you to invest in the market? And I think to a certain degree in the past, people have jumped in without taking 20, 25 minutes to sit down and speak to a specialist broker and engage them in terms of the advice that's required to be a landlord. Because as you said, it's not just the rental calculations. Local councils are making changes. There's a lot more support around ensuring that landlords are doing the right things. There's lots of regulations around security and safety of properties that people need to get into. I can't think of a better time for brokers in this market in terms of really getting people to see the professionalism that there is in the UK broker market and how that professionalism can help them to make really strong decisions. So I think, Dale, for me, it's the year of the broker, and it will continue to be the year of the broker as long as brokers engage with their customers throughout these complex periods. And I think that is always the challenge for brokers is you get a busy purchase market. How are you supporting your existing customers? And I think there's opportunities in there as we talk about, unemployment and other areas for brokers to really step back and think about, have I got the support around my firm? Is there an opportunity for me to recruit, to bring in different levels of people to allow me to really go and play in some of these markets and make that balance between existing customer and new customer? Because that, I think, has always been the big challenge with brokers is when the market's busy, the existing customer loses out. And when the market isn't busy, they focus on the existing customer. I think with all the things that are going on, getting that balance right is going to be really critical.
That's a really good point. And I think also at the moment, I think we're under a little bit of threat, I suppose, from the high street lenders actually coming into the specialist market, which is where all of the specialist buy-to-lets and the specialist help to buy ranges and so on are really very in demand at the moment. Those sort of products are probably our highest rated products and in demand across the market because they are so specialist. Do you think the high street lenders will come into our area a lot more over the next 12 to 24 months?
I think they'll be tempted to. I think they will be, they will look at where the opportunities are in their business levels. But getting into the specialist market, as you know, and being credible and reliable in it, I think is going to be one of the critical factors. So I think for brokers, they may see lots of people come in, but I guess they're going to have to ask themselves the questions: who are the players who've been here through thick and thin, who continue to support us, versus people that might be looking for an optimum margin play, and therefore, you know, how easy is it going to be to deal with? And I think for us in the specialist market, certainly at Aldermore, what we're thinking about over the next 12 months is how do we continue to work on ease and reliability? And I think that's critical for us in terms of ensuring that brokers
and a trusted name, I think, as well.
Yeah, and a trusted name, and
you've got a well-recognized brand, even with the end consumer.
Yes, so I think the more we want to do about that, and I think, Dale, one of the things that I'm saying to certainly internally to our teams is the brokers are never going to need us more than they do over the next 6 to 12 months.
100%.
And I'm really clear that we need to make sure we continue to support in those areas. So I expect some will pop in, some will look and see, is this an opportunity for us? Some will continue to do, business in terms of tweaking, making changes, being available but not really available, having products that look like they're clear, but then when you get into the details, some of them don't reliable. And I think it's for us in the specialist market to step up, to make sure we continue to communicate with people like yourselves and all of the specialist lenders and give them confidence like we did throughout, that even when times get tough, we will stick around and have a core range of capability to suit brokers. And you know, one of the things I was saying to people before, we're going to ask a lot, we're going to ask more questions, and we're going to ask more questions because what we want to ensure is that the lending we do has a really strong support in terms of continuing throughout the downturn. So for example, one of the things I've been monitoring here has been the lending that we're doing and completing. What percentage of those customers then come back and ask for a payment holiday? And it's extremely small. So actually for brokers, what we're starting to see is that you're starting to get really good quality business. You're having to do a little bit more work to make sure it works through and be a lot clearer. But back to that point you made earlier, because you know the market, because you know what brokers and lenders are looking for, I think that someone coming to a specialist broker gets a level of advice that kind of gets them to a point where the broker knows this is going to happen. And I think you want certainty, customers want certainty, we want to deliver certainty. So I think over the next 12 months, we've got a lot of work to do to keep specialist brokers like yourself.
I think it's all about working together, maintaining that relationship. But communication, that's the biggest part. We've got some lenders who are 12 working days behind. We've got some lenders who are being quite pernickety on the stuff that they want, but we know all that right from the outset. We let the broker know, and they can deal with it. And if they want to go with that lender, great. If they want to go with another lender, then so be it. But now it also brings me on to technology, because obviously you spent a lot of money over the last 12 months on technology. Has that streamlined your processing? Do you see where do you see it going over the next sort of 12 to 24 months?
I think there's, we are in a perfect place where technology and brokers are coming together really, really well. And I am very clear that we need to remain a specialist lender and be able to give individual support to individual customers. But technology can help us in a very long way in terms of making it really simple for brokers. What brokers are keen to see is that at DIP you say yes, and at app you say yes, and it flows through to completion. So our focus over the next 12 months is looking at the technological advances, Dale, that can make a difference to brokers. So when I think of technology, I think of technology that eases the broker's challenge of dealing with customers, not technology that's pretty and people think will do wonderful things. Can it actually make a difference to the process? Can the broker step back from it and go, Aldermore is doing something that helps and support us? And I think over the next 12 to 18 months, you'll see more changes from us on the technological perspective, but balance very strongly with really good customer service. So I don't think you can do technology without service. So yes, I have some really clear plans for Aldermore and what we need to do in the market over the next 12 to 18 months. But also, we've spent a significant amount of time, Dale, with the teams, especially in the furlough period, sitting back and thinking about, right, what the consumers and brokers actually want. What's the stuff that coming out of a COVID-19 could really help? So what is the balance between what products could we provide on the savings side? Because I also look after savings to help people to build deposits, to get them ready. What can we do on the lending side around a mortgage? If we were to deconstruct a mortgage, what are some of the things within it that we think we could make a big change on? And the team are working through those now to get down to the core level. And we've got some really exciting ideas that I think we can bring to market, which the market hasn't seen before. And I'm keen in the next 6 months, I'm really pushing the teams to say, right, get these out and get these ready for our re-entry into the 90 and 95% space, and get these things ready so that not only can specialist lenders go, Aldermore is being here, it's being reliable, but when it comes back into those segments in which we really only play, they've come back with a real significant difference. So I'd say they'll look out for us in the next 6 months.
Sounds
and
exciting.
Continue to work through a number of ideas.
No, that sounds really good. Just conscious of time, what would be your advice to a broker for the next 6 months, and what do you think volumes are going to do over the next 6 months?
I think the next 6 months are going to be extremely busy for brokers. I think it's going to be, the stamp duty will make a big difference. And whilst we'll see a big increase, possibly in unemployment, when I look at the work we've done with savers, and it's really interesting in my role, because I get to see the savings side and I get to see the mortgage side. Consumers have saved like never before.
Yeah.
And they're building deposits and they're working through deposits, and their parents are supporting them in being able to do it. Many of them have gone back home. Many of them have challenged what they spend and how they spend, and they've been saving that money. And they've been saving that money because literally they recognize that they get a better deal at maybe 85% than they do at 90 and 95%. And they've been saving. So I think brokers can expect to be really, really busy. I think my advice to brokers over that period is going to be 3 things. Number one, really be clear about how you're going to look after that existing book of customers, and not just reaching out and touching them because there's a product transfer, but how you're going to speak to customers just to engage, to see, look, how is life with you? How are things going? You know, what's going on within your world, and how can we support you? And I think that real clarity, again, back to customers and being interested in what's going on in their lives, even if there's no financial need, is something that can get lost in this period. But brokers should lose that at their peril, I believe, because I think these are the times for strong relationships. I think the second thing that they need to engage in is really get close to the detail of what lenders are offering and being clear about what are the options and opportunities for my customers. And also, I think the third thing is being really realistic with their clients around, it's going to be a more intense period. It's going to be more questions asked up front. Yeah. But the more detail they can give, the more information they can supply, the better lenders will be able to package together that information and provide what their customers ultimately want, which is a mortgage. And Dale, if I can add a fourth, I don't think that the brokers can afford to miss this opportunity to talk to customers about protection.
Sure.
We know that this crisis has shown that a number of customers could do with better levels of protection. Yep. And if brokers are addressing that in these conversations, I think they're missing out really, really strongly. And that fourth one about protection can be picked up in that initial conversation I spoke to about what is going on with you, and asking the customer the question, over the last 6 to 12 months, what's been the one thing you wish you could rely on that you don't have? And I think what customers would say there is, you know something, when I think about it, when I think about that extra bottle of wine that I might drink at weekends, that extra trip out I might have done with that family, that £6,000 I would have spent on a holiday, I wish I'd taken £50 of that to protect me and my family against the challenges that are out there. If brokers can do those 4 things, I think they continue to remain relevant for customers. They continue to drive their business volume, to continue to protect their businesses, and they continue to do what they've done best, which is to be the dominant force in the mortgage market. And I think they can continue to do that. And I know people have always talked previously about, you know, where do the banks lie and what does this mean for me? But I think there's never been a better time for a broker to really show customers their relevance. And I would hope, Dale, over the next 6 months, I know your firm will do it, but I'd like to think many more firms, you know, will start to think about that and really make that work.
That is a brilliant bit of advice to end on. Thank you so much for your time, Damian. I really appreciate it. And thank you for watching Impact Insights. There'll be more of these coming soon. In the meantime, thank you for your time and keep safe. All the best.
All the best. Thank you.